All right. Hey, Scott. Hey, Jamie. How you doing, buddy?
Andy, I am good. How about yourself?
Not bad. Not bad. Some crazy action in the market today, I thought, and some,
Right. Yeah.
yeah, some interesting stuff to talk about. I do want to thank everybody for taking time out of their day to join us. We got some cool stuff to show you today. Today's going to be, it's going to be a fun day, but I think you're going to get a lot, and I'm going to actually request that you guys start dropping questions in as soon as you want. We usually ask you, like Scott did, to hold on to those questions, maybe to the end. We do have some stuff to present today, and we will definitely talk about that. But when you get market action like you've seen today, and you get a lot of disconnects in the market, I've been seeing them. I really want to kind of focus on that today because I think I can be really helpful and valuable. Somebody with 19 years, trading experience alongside Jamie. This could be very valuable for you guys to fire away, with some questions you may have, something that may not be working now that normally does. And anyway, I just want to really encourage you to, if you have questions today, to drop them in there, and that can be about the software or if you have trading questions, because I know days like today can be very frustrating. I've traded plenty of them in my career, so just fire away, and we'll get to them as soon as we can. Before we do get started here, I do want to go over the disclaimer. Just to let everybody know, this is for educational purposes only. We're going to be talking a lot about stocks and chart patterns and all that fun stuff, but I don't want anybody to construe this as investment advice. Please seek out a registered broker or an RIA or somebody who is licensed to give you that. All right, let's take a look at our 5-star support education and training. This is rated by me, but no, it really is. It's an incredible amount of support and education and training you get here, and I can't emphasize how important that is, not only to learning this incredible software, very powerful software, but also to have the access to professional traders as ourselves, as Barry in the daily trading room. When I started, it was just me and a computer and looking at a bunch of, and Jamie, same for Jamie, same for Steve, same for Barry, everybody here, Brad and Dan Merkin. And I can't tell you how much this support and education and training that you get when you subscribe to Trade Ideas can really really help you as far as decreasing your learning curve and to where you're profitable so much quicker. Honestly, it took me a year to get profitable before I started actually making money, and I know you don't want to go through that. It's not fun, and you can really cut it in half or even maybe down to 2 or 3 months with this software. I didn't have this software, and I didn't have the support and education that you get here. We have 4 webinars a week, all in the same time slot at 5 o'clock Eastern time. And then on Friday we have a new support session. Now I say new, this is going to be our 4th one tomorrow. People are loving it, and this is not just for subscribers. This is for anybody out there that wants to know more, learn more about our software. Come in, kick the tires, ask questions, and we can show it to you just like we're doing here. But it's 3 hours long, and it's made for you. So come on, come on, ask your questions. I mentioned the trading room. That's a daily event that happens 30 minutes before the market opens and basically lasts about 7 hours, so, and Barry is in there showing his screen. You get to look at the software, and he navigates it through why he trades stocks and gives you the reasons why he's trading them, manipulates the market using our software. Well, I shouldn't say manipulate, I should say negotiate. Wrong word to use there. Barry's manipulating the markets, Jay.
I told him not to do that anymore.
All right, but one last thing, guys. When you do subscribe to Trade Ideas, you get a free one-on-one hour of power training with either myself, Jamie, or Steve. This is an hour to spend with you, helping you do whatever you want to do. Lately I've done a lot of these with people who have gotten the software and they've actually taken 2 or 3 weeks, Scott mentions this all the time, to learn the software a little bit, because we give you videos and we have support sessions now, so you can really get a good feel of the market of the software, and then come in and the one-on-one training session can be much more advanced. And not only that, we can go down the road of trading strategies and things like that. But it's a $99 value, and we do get people to take many, many more after their first one. But when you sign up and subscribe to Trade Ideas, the first one is free. All right, let's take a look at our agenda today. And market recap, I think there's going to be, we want to spend a little time on this because it's really getting quirky, man. It's some strange action the last few days, and we're going to talk about that. Holly recap, had some incredible directional bias this morning. First of all, coming in with a lot of shorts. Jamie will highlight that, more shorts than long, and then firing off shorts right out of the gate, which when I see that, it kind of gives me a clue what may be going on in the market. But interesting enough, I mean, the shorts, they didn't work. I mean, I don't want to say they didn't work. Some did and some didn't. She finished down, you know, marginally today, but we're going to talk about that, and we're going to talk about, and there will come a time where these do work, and I'm really looking forward to that day when we're in a full-blown bear market. You got to remember, we're in a bull market, okay? People are still bidding this market, even though you see a lot of carnage today, especially in the tech sector, but there's some areas that were being bid today. So we're going to talk about that. I'm going to talk a little bit, and this is where I want you guys to come in and ask questions, and of course, Jamie, he's been through this. He will help me along with this. You know, when a market gets shaky like here and the dynamics start to change, you know, there's certain things you need to do, because if you've only ever traded a bull market, and I'm not saying this bull market is going to end, although I will point to some things that could be hinting that it may be coming to an end, but you need to be prepared. And I'm going to tell you, help you out with things to do, what to look for. Just a lot of it comes down to capital preservation. A lot of it comes down to pulling back, sitting on your hands, going smaller. We'll talk about all that when we come to it. And then, guys, we have a surprise for you. Okay, I think according to Brad, I believe you guys are going to get a new release tomorrow. So we're going to definitely go over some of the things you guys are going to find in the new release, and I think you guys are going to be really excited about it. So let's back out of this and bring up, oh gosh, I can't get this, thank you. Bring up the spiders. And we will definitely go over the Qs as well today, possibly the diamonds real quick and the IWM. So let's take a look at the spiders and see what we're looking at here on the daily chart in the spiders. Zoom in. I'm not going to draw the trend lines because you've seen them over and over. Basically, the trend line is still way down here, but you have, I mean, to see this kind of action, we talk about chutes and ladders. We've been seeing it in the Qs for a while now, and now you're starting to see it develop in the spiders. You know, ugly red day right here, closing on lows, you know, kind of breaking down, you know, basically this level that it kind of was holding. I'm going to draw a little horizontal line there. It kind of took out that level there and closed below it. But what you would expect, you know, maybe a little follow through, at least down to this level right here. We finally got it today, but this is something you would expect on the very next day. But no, we gap up and basically go and take out the high and close above the high of this one. Just crazy action. You can't, you know, you can't gauge this type of action, and it's very, very hard, especially if you're, you know, swing trading. Position trading. This is when I back away. You know, I let the market kind of figure itself out before, you know, I jump in and try to choose. You know, you want to jump on the winning team, the art of war, you know. So and then today we turned around and pretty much opened, you know, close to where we closed yesterday, a little bit higher, and then pretty much sold off all day, and then a bounce in the last hour and a half or so, you know, in the market to make it a little bit respectable, but nonetheless, you know, ugly, decent volume today in the spiders. I'll have to go back and look at the, let me just go over there real quick. So yeah, almost 2 times relative volume in the spiders. Definitely a down day. But let's take a look at the Qs, Jamie.
Yeah, the Qs, you saw what the SPY did there, and it's almost like the Qs, we kind of have an idea of what they might want to do, but I'll let you go into detail on that because it looks a little quirky right here.
It really is. It really is. And I know saying the day or my next webinar after this down day, I alerted to this, and I said, guys, anytime you see this kind of volume, this was over 4 times normal volume in an index fund. That is huge. And I alerted to this, that this has to be paid attention to. I don't know where we're going from here, but that definitely is a red flag to me and alarming. And then we kind of vacillated around, tried to break out of this kind of range, and once again opened up this day, and kind of another ugly day there, but followed up by a 3 days ago, a really ugly downdraft, and some more. That was 2 times normal volume. And of course, look at today. Let's take a look at today on our single stock window. That's what's great about our single stock window. We can look right up here at relative volume and 2.64 relative volume. So you are seeing a lot of, I don't want to say a lot of money come out of the market. I'm always confused about that because for every seller there's a buyer, but you're seeing a lot of volume on the downside, and this is obviously going to play out, but I'm seeing, when you start seeing signs like this, a lot of chutes and ladders, a lot of volatility, big volume days at the top like this, when you're not going higher. It's one thing if you're going higher and the momentum's continuing and your volume is increasing, but when you start selling off and you start seeing this increasing volume as you kind of trend lower, it's alarming. So not calling a top, like I said, but at the same time, I'm seeing signs of a top. And only time will tell. We'll see what happens. But if I were a betting man, I'm not going to go there. But anyway, Jamie, real quickly on the diamonds here. Ugly day in the diamonds. They were holding up the best, and once again, dark cloud cover right there. But bounced up at the close, made it somewhat, not respectable, but somewhat better than what it was. And I haven't even looked at the IWM today, but I'm sure it fell right back down into its range, and it did. I'm getting to where I don't even want to look at that one anymore. Jamie, do you have anything, words of wisdom on the overall market analysis?
Yeah, you pretty much summed it up well. I still think if we, going back to that Q chart, I thought we were going to come down there and get a little bit lower on that wick. Maybe it's over. Maybe there's a little bit more to go tomorrow. But like you said, if I was a betting man, and then I'm like, well, I think that, I see the potential of what could happen tomorrow, which I guess is probably the best observation. Well, everything's hunky-dory and we trend back up tomorrow. Or if there's one more little push, if all the sellers aren't done, it's clearly definable on that chart where we might go to, right?
Right.
And if we do get past that low from the 18th, well, that'll be interesting, but I'm not going to worry about that just yet. See what happens on the open tomorrow, and try to pave my path accordingly.
Yes. Yeah, that's all you can do, Jamie. I think this is a trend line going back to last November that it looks like there's several places. I know Steve has his drawn a little bit differently, but if you do draw it there, it looks like I take that back. That would be lower than that. It's getting all jacked here.
And what I will say, Andy, is once again, as this has kind of been a common theme in the past webinars, is things aren't acting like they normally do at this time of the year. Whereas, go back several years, the summers were always just like this, hey, sideways action, maybe a little sell-off one day, maybe a little, buy it up the next day. But a lot of sideways action. That's always been how the market is in the summer typically. Well, the only constant is change, and we're definitely seeing that change for sure.
You're right. Correct. Correct. Yeah, it is back, especially what you're seeing in the Qs now. If I just looked at the spiders chart, I'd probably be going, it's just slopping around, getting ready for another move higher possibly. I wouldn't really like it if I was bullish right now after the action day, but I could see it kind of digging in. This is a level that it bounced off of today, the prior breakout. If I draw this right here, horizontal line, and you kind of dip below it there, but still dug in. So that's kind of an area. Any level below this range right here, I think we're in trouble for a potential sell-off. But it's really the Qs that concern me the most. And but anyway, we're not going to beat a dead horse here. We're gonna turn it over because I think there's some really interesting stuff to talk about today in Holly. And why? And before I turn it over to Jamie to actually, you can actually take it over why I'm talking there, Jamie. But yeah.
You let me know when you can see.
Okay. Yeah, I just kind of want you guys to keep in mind when you look at these trades today, because a lot of us were seeing this thing. We came in. The first thing I said to Steve this morning, and Jamie possibly, is like I said, wow, Holly has more shorts than longs. Interesting. And then she starts firing off all these shorts. And sure enough, the market pretty much for the first 3 or 4 hours of the day just craters. She has some positions, but they're not really working, and this is where, guys, you have to understand and see the market in the bigger picture. This has been a very long, one of our I think the second longest bull market, and actually maybe trying to attempt to take over the longest one. I doubt it makes it, but when you have this kind of sentiment for so long, it gets entrenched in people's head. Hey, buy the dip, buy the dip. That's what we're supposed to do, buy the dip. And that's why I think you saw a lot of stocks today, even though the major averages were getting beat up, pretty good. And Amy made a point there in our question panel that maybe just rotating into other sectors. And you're very right, Amy. That's what's been happening for 8 years now. And a lot of that's because of the Fed-induced zero interest rate policies and all that. Money has nowhere other place to go besides risk assets. But to see a market today, today just keep going down, and the P&L, the risk on P&L not getting any better, it was baffling. And it would be baffling for anybody. But this is where, now if you had the same tape, if the market's below its 200, and we've been in a kind of a bearish market for 3 or 4 months, you would not see this. You would not see stocks holding up. And this is the kind of thing that if you've never traded a bear market, that you're going to, I want to help you understand that right now, because we're still in a bull market, you have people bidding stocks. Anytime, buy the dip. Buy the effing dip, they say. Buy the dip. And it's working. Or in case of the day, in some of the stocks, you may have bought them and was flat, but I notice a lot of stocks not going down. That will change. When we do get a bear market, and a bear market will be determined by several factors, but you will know it. You will know it if you're a trader before anybody, because the price action is totally different. Trades like this that Holly put on will work, and that blotter would have been totally different on the risk on. But anyway, Jamie, I wanted to throw that out because it's very important, even though it was a very ugly tape today, that the reason why you may have been in a short and it's not working, because we are in a bull market and people are still bidding this market.
Correct. And that's all you hear from the mainstream media. Buy the dip, FANG. Buy the dip, FANG. Well, things change eventually. So buy the dip and FANG worked for a very long time, but guess what? The only guarantee in the market is whatever you're doing that's working will eventually stop working, or lose some performance. There's always a retuning. The only constant is change, so forth and so on. So having said that, yeah, you're right, Andy. When I first saw last night, once the optimization was complete on Holly's strategy panel here, what did we see? We saw 5 shorts and only 3 longs, total of 8 strategies, and weighted to the short side. So that's the first thing that makes you go, well, that's normally not what happens. So that should be like a first light bulb in your head when you're trying to gear yourself up for the next trading session. All right. And of course, as Andy has so eloquently pointed out, when we're looking at the SPY here, yeah, a little, you know, outside of this area here, but a snap back up. When we're looking at the upper range here, the world's not falling apart. It is a down day. The Qs look a lot nastier. Why? Because of FANG, you know, Facebook, Apple, Netflix, Google, because there's a lot of weight in that index. Now, you know, popping back over here, sure, still a little selling, but in this nice tight range, nothing to worry about unless we get out of here. Now, one day does not a change make. Now, we did see things that aren't typically happening, but before the market rolls, there's going to be a lot more of these days. You know, and of course, how long is that going to be? Nobody knows, but when you start to see things pop up that aren't normally popping up, well, we take note of that. We catalog that for our own little roadmap that we're trying to build for the future. So while we look at Holly's risk, whether it's risk off today, down 38 cents, or risk on today, down 16 cents, on a whopping total of only 9 trades between these strategies here. But once again, what do we do when we watch Holly? We watch how this P&L proceeds as she starts opening positions. And we can see here today, she did wait about 12 minutes before her first trade, which was a short. And then when all these started rattling off, I'm like, well, it's a good indicator. I mean, that, you know, typically it's to the long side when we see Holly doing that. And, you know, everybody has been witness to some of those days that she has, and then some of them are flat to down slightly. But before we move on here, it really is all about our expectations. Because if we don't have expectations that were constructed using reasonable metrics, well, then we're kind of lost. We're trying to navigate without a roadmap, or more importantly, in this case, us being the Google Maps of the market. You don't want to go anywhere without your navigation. And you certainly don't want to regress to using the paper map. So before I move on to the Holly trades, I did want to pull this one slide over here.
No, thank you.
Okay, so this is what I posted on Twitter after the first 20 minutes of trading today. And these are the compare count windows that a lot of you have seen in the past. Now, typically it was just the 5.4 billion market cap and higher. But since that point in time, in order to, you know, parse the data a little bit more precisely, what I've done is I've split these up into market cap, you know, sub 2 billion over here, between 2 and 4 billion here. These are pretty much the same. This one's just got a 4 billion market cap minimum, where this is the big boy of 5.4. And you can see the readings were pretty much the same, 61% to the downside. Smaller caps, not so much selling. We got 55 over here and 53 here. Now, what is a good compare count reading, or what's an interesting compare count reading off the open? And from my, you know, almost a decade of watching this information, what I've come to realize is that, you know, 53, anything under 55%, it's going to be, well, that bias is there, but there's not going to be as many animals in the forest as there normally are. So you better take the things that you find that meet your patterns and be frugal and be in a conservative mode of taking your profits that day. Well, when you see a bias creep up over 60%, or even in the high 50s, but especially over 60%, well, that really does mean something. So considering that these metrics were snapped in the first 20 minutes, what are we doing? We're getting a snapshot because institutional selling was pretty high today. You know, it wasn't me, you, and the rest of the day trading community marching the markets down. No, it was not Barry manipulating the markets either. But the bottom line is, when you see metrics like this, pay attention, all right? And it was a very good beacon to see today that gives you a little idea of, you know, where the tide's mainly going to be flowing today. So this is another way to get expectations. When you couple that with what you were shown by Holly before the market opened, and then what Holly was showing you shortly after the market opened, and plus your compare count windows, well, then you really have something. All right, no guarantees, but that's the direction that the wind is blowing for the day. It wasn't blowing north, the wind was blowing south today. So that's like us on the golf course when you see Tiger Woods throw up his grass, just kind of see which direction the wind's blowing. And I hate to oversimplify it, but, well, no, I don't. Take that back. All right, so now, as Andy was saying today, when we look at the risk-off column on these shorts, and by the way, 9 trades, only 1 long that we see down here from Wake Up Call. No big surprise there. But risk-off 11 cents, 8 cents, 22 cents. And typically, you know, when the rolls are reversed and it's a big up day, what do we typically see? We typically see a stacked blotter with a lot more trades. We see pretty much every day 2, 3, 4, 5 risk-ons that are way above risk-off, but not today. And we can see here, as Andy was saying, although there was some downside action in the market today, we're still in a bull market, right? So we can see here on the downward dog, Holly gets out prematurely with a reduced risk because she gets into it. It's not going down. It's actually kind of bopping up and going sideways here. Of course, we've seen this plenty of times before. It's just usually the opposite pattern. So we get short with Holly. It takes a little breather here, nowhere near the stop loss, and then it does continue. Hugs that line once again before we get the most out of it. So while these things are working to some extent, this one stayed below. That's why we're seeing the risk on. But what about, say, this guy, risk on here? Okay, completely separate for the ACAT, right? It never did catch. It never did continue in the direction that we wanted it to. But Holly gets short right here, takes a little bounce up. So there's still some nice money to have been had here using a little risk management, right? And of course, what can we use to assist us in this process? Because if we're shorting in a market that's going up, this just happens to be a little, maybe there's some rebalancing, maybe there's just some profit taking. But the bottom line is the down moves are predominantly short, even though they're not very long lived. So if we were in this with Holly and we're getting that in the money action, well, let's take a peek at the daily, all right? Let's just try to gain some realistic expectations about how much might be in this trade, because everybody's done it. We get out for 15 cents, the thing plummets another 50, and we're like, could make 5 times as much, 4 times as much. But of course, we're never going to bottom tick, top tick, unless, you know, it does happen, but it's mainly a little bit of luck when you top tick or bottom tick anything in this market. So if we were seeing it as it was coming through these levels here, and we can see pretty butting up, nice butting up to the bottoms or the bodies of these candles here, well, that's exactly where it gave up the ghost and turned back up. As Andy said, when the market actually does rotate over, well then, more than likely, when the market does trend down, we will see continuation. But since we're not in that market right now, when a short does move for us, we really have to play by the rules of identifying that support and resistance level for the stopping point. So it's a very good day, and I usually don't have this column up here, but it's a very good day to take a look at this column, max profit. So once Holly called the entry signal, this is the most the trade was up in risk-off format. So we see Holly finish the day down 16 cents on risk-on, 38 cents on risk-off, but there was a chance between all 9 trades of, let's see here, $1, and if we sum up this column here, what do we get? We get 1.34. $1.34 was the max profit here. And if you notice here, the worst one was 0. So it leads me to another good point here. Getting comfortable with Holly, getting comfortable with a statistic model in general. So let's play a scenario out here, a couple different scenarios. With Holly having 9 trades, 2, 4, 6, and 3 make 9, and let's say, okay, today, whatever, we keep in mind that this was the day that unfolded, probably one could say the worst day we've seen in a while, according to the indexes. Now, think about it from this perspective. On 9 trades today, if you just immediately participated with Holly, 50 shares a pop, you've been long about right at 450 shares total, right? So if we look at risk on, which means you were just holding everything, let's just use 400 shares for easy math here. So if we were in 400 shares, and at the worst, on risk off, we're down, let's just call it 50 cents. That's between, I can't really make out that ledger right there. So on risk off, the most you would have ever been down is a couple $100. Now, that's nothing to sneeze at. Nobody likes to give away a couple $100. But for a losing day in the market, it's not really that bad. And then when you tack on this type of action for a statistical model to put out all these trades and on risk off, you would have only had a drawdown of $200 on the day. That is something in and of itself, because we can see here the bias was short, but the model did not overtrade because these strategies are so specific. They're like preset traps. The traps either spring or they don't. So from a statistical model standpoint today, not a bad performance to only be down this much, and then on the trades that were generated, for them to even be in the money these amounts at the tops and give us time to react is a pretty significant achievement.
Mm-hmm.
And of course, as these things, once again, Holly statistical model, very advanced, very unique, but we could just call her another high quality information streams pointing out interesting things to you. So, for example, on this stock right here, CRZO, Holly calls the short, doesn't work, gets stopped out, stop hit. Now, when we see Holly get stopped out here, and obviously we're a little bit behind, we're like, that one didn't work. But then my eyes are drawn to what's happening. So, by the way, take note of this name up here, oil and gas. Mm-hmm. Now, Andy, you correct me if I'm wrong here, but a lot of the times, but not all of the times, when the market's going down, we're going to have the inverse reaction in oil and gas stocks, right?
Yes, or any maybe stocks, sectors that have been beaten up, and you're correct.
Right.
Yes, a lot of times, so yes.
If I have that piece of information loaded in my mind, which once you get it, you get it, you know what to look for. What happens is I am automatically drawn to this little pattern here. All right. Ollie shorts it, doesn't work, gets stopped out. At the same time she's getting stopped out, guess what? Market's going down, sometimes oil stocks run inverse, and look what's happening. Stopping out and breaking out of its range with some not so bad volume we can see down here. So if Holly, your statistical friend, your trading buddy, gets stopped out of something and you take a look at it and then you factor in, well, I remember Jamie and Andy in that webinar telling me about how oil stocks sometimes run inverse. So it didn't want to go down. It's got this nice little base right here that we can draw some lines across. Could have easily played that range break to the upside. The only reason you knew about it was because Holly was in the trade. It worked for a minute, or not this one. This one did not work for a minute. As soon as we got short, turned back up and busted the top there. Now, if it wasn't an oil and gas stock, I wouldn't be, sketching out this scenario, but it is, and that's what happens in the market. Not all of the time, but a lot of the time. So once again, using the trading office analogy, just look at Holly as another person. She just trades with statistical probability. When we see this color of red, and by the way, we haven't been seeing this shade of red. It's usually pink, or kind of white because we're not really down that much. But when the Q's finished down 1.7%, it's by almost 1%, and this is kind of the first times that we're seeing this. If things continue in this fashion, then you will see things change dramatically here. But of course, the statistical model has to have several days, if not weeks, of information before it can start adapting to a downturn market, which we are not currently in. So just keep that in mind as we proceed not only through the end of June, but into July. And of course, it makes it feel kind of like today's a Friday with this action. But nope, it's only Thursday, and we have tomorrow to go. So if things kind of turn out tomorrow like they did today, well, this should all be fresh on your mind. If the market decides, hey, it's time to go back up, well, then it's just kind of business as usual.
Mm-hmm.
All right, Andy, so
Very good, Jamie.
Just to recap, for our expectations, seeing Holly struggle right off the bat, that tells us something. If you're watching your compare count windows, that also tells us something. So we're gaining very valuable information in the first 20 minutes with the compare counts and with Holly. And, let me just point this out. 5, 10, 15, 20, right? So the market really hadn't had much of a down move yet. And then we receive that information, and then we can temper our expectations.
All right.
I mean, that's pretty much it for Holly today.
Yeah, you covered it very well.
A lot of things going on under the hood, but once again, you still have to have something to look for, right? And let me just throw one more thing in there, Andy, and that is obviously pack leader list vacant today except for 3 or 4 names. No big surprise there. But once again, and this is the simplest kind of way I can throw this out there, is turbo breaks up today. If you look at what was coming through here, well, guess what, ladies and gentlemen? If you were a bank, everything was hunky-dory. And then look at all these guys coming through here. Okay, mining and quarry, manufacturing, finance, information. I mean, while the list was a lot smaller of stocks continually going up today, if you're looking at the right ones, well, and just simply showing a column here, that in and of itself can give you information right off the bat. Okay, well, all these are oil and gas stocks. They were going up today. Finance going up today. Even the thinly traded finance stocks had positive upside today. So once again, don't discount the fact or don't discount the value in simply adding sector columns to your alert windows or your top list.
Exactly, Jamie. I mean, some days are just tough. I was having trouble finding content today, and I'm not going to kid you. I mean, it's not every day I'm going to come in here and say, oh, you should. This is what you should have done. You should have made money, because I know it was tough today. I'm watching Holly. Holly's putting on what I consider to be pretty good shorts, and none of them are following through. Had you noticed the longs that she makes, and you get a trending market like to the upside like we had to the downside side today, her risk on kills it. But today you could not get the risk on, to go anywhere, kind of move. And I even mentioned to Jamie and Steve in a instant message, I said, I'm expecting some sort of a relief bounce today, because a lot of stuff is still being bid, because I'm just by watching Holly, and we finally did get it. I probably said it a little bit too soon, but we finally did get it. So if Jamie will pass it over, I kind of will give you guys some ideas about how to trade when you get into a market like this, because I know not all of us can sit back and say, oh man, I've had a great year, I'm just going to sit back for the next summer. It looks like it's going to be a lot of sideways back and forth sloppy action. I'll come back in September. No, a lot of us are out here making a living at it, pounding away, and trust me, I did it for,
Andy,
for 17 years, man.
Nobody ever leaves on vacation when they're making money. Nobody does, because you're like,
no.
it's going to cost me $5,000 to go on vacation. Then I'm going to miss out on making $5,000. That's going to cost me $10,000. So don't ever let a trader tell you they're going on vacation because they're making so much money. Typically, the way it goes is it's a little harder right now, so I'm going to go on vacation.
Yep. Exactly right, Jamie. And but don't feel like you all, you know. So
let me clarify that. That's not always the case. Just a general rule of thumb. Or it's the summer.
Sure. Exactly. There are people that, you know, on Wall Street, sure, they can afford to take a couple of months off. But unfortunately, you know, some of us pikers out here, man, we got to pound away every day of the year. It's open, but but anyway, what I want to tell you. Don't feel like it, you know, maybe you have a plan, you know, and your plan is you want to make, you know, $500 a day, $300 a day, whatever it is. I mean, there's going to be days where you make double that, okay? And there may be days where you can make triple that, even more. I don't want you to have that sort of plan where you have to feel like you have to squeeze that, you know, profit out every day of the market, because sometimes it's just really hard to find. And when you get in a market like we're seeing right now, when there's, you know, a lot of disconnect and a lot of, by disconnect, you know, I woke up this morning, I see the dollar, you know, I'm just going to use the UUP, you know, rolling over like it is. And yet, you know, there was a time when the dollar was rolling over like that on the daily chart. You would see gold breaking out to the top on the daily chart, and just the opposite. Yeah, gold gaps down with it, you know, and moving down with the dollar, and just a lot of disconnect in the market. Oh, I did want to point out this one. Speaking at CRZO, it was coming through my extreme volume on the downside this morning, and that was just a capitulation turnaround totally in that one. And that's why you can see it gap down. But take a look here on the daily. When you get something that's that overextended, this move is going to come at some point. It basically has gone, you know, from cut in half. Geez, it was cut by 70%. But that's what happened there, and the thing reversed and went to the upside, and was kind of nasty for anybody who was short that this morning. But what I want you to do, don't feel, some people are not comfortable going short. You might, whether you're new at this, you just don't like it, you know. And I've shown this extreme volume, high, low, probably the last 3 or 4 webinars, where you can sit back and be patient and sit on your hands and look for the right stock to come through, even if it's only one stock. And really, you can wait, you know, till 30 minutes after the market opens, you know, and lo and behold, you know, if you're watching this morning, and let me go find it, and I believe it was around the 9. Wait for it. Yeah, select comfort this morning. It was blowing through here a lot earlier, but say you were patient and you were waiting for 9 o'clock. You want to sit on your hands and you're just observing your thing. You're seeing this come through early, but you don't want to chase it because you're adhering to your rules that you're going to be patient the first 30 minutes. Even if you bought this thing at 9 o'clock and there's the alert at 34.59, take a look on the daily, guys. And we talk about this, and beautiful pattern right there. That's what you call a cup and handle, breaking out, taking out that high right there. So even if you waited for this thing to run as much as it did and bought it at 34.59, the thing still went up to, what, 36.73? So over $2 move there, waiting, being patient, waiting for your pitch. And I spend so many of my sessions trying to get people to focus on the daily charts, okay, and stay away from the slop. When you see these alerts come through, and I don't know if I'm going to be able to find one, but you know, they're kind of in the middle of no man's land. But that's a big gap up. I'm not gonna sit here and try to find. You know what I'm talking about. When you pull them up, they're doing huge volume, but they're right in the middle of their sloppy 5-day, 10-day range, going nowhere. Look for those patterns, and if you don't see it, move on. Look for the next one, because if you were watching your alerts today and being patient, even if you were want to play the upside, there is potential there. Now, for those of you who do want to short, It's a tough game, and I've created a little top list for you that I'll share with you. It's nothing fancy. It's just a way for you to find pockets of opportunity on the short side. And what this is, you know, a lot of people, most people who short, they don't like to get the ones that are overextended. And I understand, because snapbacks can be brutal. But at the same time, those are the ones you can that keep just going down, you know, versus trying to, the market's weak. You got the bank sector today, which is showing strength today, say Citigroup, for whatever reason. You're going to short this because the market, you know, you're patient and you wait here and you start shorting it, and the market just continues to crumble, and this thing bounces back up and pretty much closes, you know, in the upper end of its range, goes nowhere. The whole banking sector like that. You got to get your, that's typically how people want to think. They see the market falling apart. They want to find stuff that hadn't fallen yet and short it. But I'm telling you guys, if you will short the weak stocks and just, you know, obey your rules, get out when you're wrong, when you do get that bounce, and be patient when you enter. You don't have to go and chase these things. There will be a bounce. And if we just kind of scroll through, and don't worry, there's nothing to this. All you really have to do is go in here to configure. It's a top list, so there's no alerts. And basically I have $5 to $200. Change from close has to be down at least 2%. Average daily volume, 200,000 on the 10-day period. And that's it. Oh, position and 10-day range. I got a max of 5. So I want to find stocks that are at least about to break through. This means when I put a max at 5, it has to be 5% or better from going below its 10-day range. So I'm looking for stocks that are either below its 10-day range or about to break below its 10-day range. And then just sit here and you have a top list, and you can be patient. It's going to sort for you every 30 seconds. And you can, if you want the real weak ones, you know, you can go from, like Fred this morning. You know, if you had this top list running, you would have seen it, you know, go off at 9:37. To me, I like to do it just the opposite. I like to find the ones that are weak, and that's why I have mine sorted by change from close, the highest on top. So that way I can look for some opportunity in the morning. And maybe, then unfortunately with a top list, you don't get the price, but this one went off at 23.51, which is about right in here. Kind of went back and forth sideways, finally broke down for you. I'm going to try to get some more there, a little more. DLR, and once again, be looking at the dailies. Be looking at the dailies. This one off around right in here at 113, went all the way below 112. You'll see there's going to be some opportunities. When I share this with you and you go around and look at these charts, you're going to see that, and this is set for basically 8:55 to 9 o'clock, 30 minutes after the market open. I didn't set this thing way back so I can find the ones real, you know, in the first 10 minutes of the day, because I'm trying to teach you to be patient and maybe even wait till 9 o'clock, and that's why I have this to 8:55 to 8:59. But anyway, you can see these, you know, stocks develop. So these trades develop. So once again, you're going to see a lot of patterns with the market. A weak stock, you'll get a couple of green bars like this, and this is when you wait for your pitch, and when the market rolls back over and this goes back over and takes out that low of that green bar, is a very good shorting opportunity. And you will see this set up when you go through these. After I share this with you, you know, there's another one. Tried to bounce, roll back over. Oh, MKC, this is kind of a wacky one. I'm not sure. No, that one actually kind of worked. A couple of green bars, kind of rolled back over. You'll see a common theme through all these because they're weak on the day. You can see the 5-day range. You can see the 20-day range. So you know these things are not showing a very bullish chart, you know. Bud, nice one there. Sold off, got your alert. You had a couple of green bars, wait for your pitch, and then rolls back over. So anyway, that's the kind of stuff I think you should focus on instead of just maybe, you know, looking around, looking for, you know, stuff to, and of course, keep an eye on your sector. The SMHs were very, very weak. The last 3 out of 4 days, they've been just getting hammered pretty good. So if you do see a sector in here, I see CLAC right here at 30 to 90, 319. So look at this, beautiful. You have CLAC on here. If you know your sectors, you know SMHs are the lowest sector on the board. You see CLAC setting up on your Bears Rule top list, okay, and then you get a nice little bounce there. You wait for your pitch, and it rolls back over and versus that bar. Boom, nice little bleed off there for a buck and a half.
Of course, we're having some people wanting you to share that bear window.
Oh, absolutely, absolutely.
And we also had a request for your pullback window as well. So
my pullback window. Did I show a pullback window? Oh, the pullback above 50 SMA Pro.
Right, I believe so. That was a
all
question.
Right. Let me.
So that one and the Bears Rule.
Yeah, let me drop that in there right now. First one will be Bears Rule.
And then don't forget to give everyone a peek of the other new feature that's going to be trickling out.
Yes, we'll do that real quick. Thank you for reminding me. Okay, that one I didn't label it, but that one is Bears Rule, and this one is going to be, this is my pullback above 50 SMA. I'll label this one so you won't get confused. All right, yeah, I'm glad you reminded me, Jamie. I just noticed that, yeah, that we were out of time. That's what happens when you take up all my time. All right, guys. From what I'm told, you guys are going to get access to one of our newest beta releases. You're going to see the gradient colors in here. And what's great about this now, you can type symbols in here, and whenever you enter it, it's going to give you a profit target and a stop price based on algorithm and based on technicals. You know, technicals based on support, resistance, things like that. It's an algo. I've been looking at a lot of these. Boy, it really matches up well with the charts. The profits and stops, the profit targets and stop losses. It's going to be a nice feature, especially for those traders who are new, you know, who may not know where to set their stops. This one will match it up. Look at this bud right here. If you entered it right here, you got the low there. Coincides with some levels over here on the daily chart. So really nice feature. And one other thing, and I'm not sure you're going to have it on this release, but if not, it'll be on the next one, which is hopefully next week. We have a new thing called surfing, where you can just go down and start surfing. Just click on it, and the charts will start cycling through all your top list, and it will cycle through the top 3 on every top list. So this is something good that'll keep. Maybe Jamie asked me today. He said, when would you start looking at this? You know, and I told him probably 1 hour after the market opens, because in my first hour I'm kind of in my zone. I'm looking at all my alerts, looking at my extreme volume, Holly, of course, turbo brakes, whatever it is. I'm in the sector, so I'm absorbing as much as I can. But then after an hour, maybe, if I'm, kind of want to pull away and just look, and watch what's coming through and look at my charts and see if anything looks good to me. In this way, kind of keeps my fingers off the triggers and pulling and buying and selling. And in other words, just looking at charts and absorbing what the charts and seeing if I see anything that steps out on me. Like this right here, if I'm looking at it, I should have stopped it there. I'll go back to it in a minute. That was that DWT. And to me, that's a pullback on the daily. And I'm going to take a quick look at that real quick. The way you cut this off, once again, it just keeps cycling through all your top lists, the top 3, the highest 3 on each top list. Okay, just cut it off. All you got to do is uncheck it. And the reason I wanted to go back, that's a pretty little chart there. Of course, it's a crude oil, bear, isn't it? That's crude oil. Shares. Invest. You know what? Since I thought it was a stock. It's an ETF, so I'm not as interested in it anymore. But anyway, guys, long story short, the market can get difficult here. We're kind of in a range. There's a lot of volatility. I know there's some people getting hurt out here. I've experienced too many markets like this, and you really got to keep your bearings. You really got to be patient. Wait for your pitch. Don't feel rushed about anything. If you're comfortable shorting, start working on, some strategies for shorting, because if we do get into a bear market, it really needs to be part of your arsenal, because, boy, yeah, it can be really tough if you only have, one long strategy or game plan. But anyway, it is at top of the hour right now. Good time to bring in Scott. Scott, if you would come back in and kind of walk us out. I'm trying to lose my voice here.
Hey, thank you. Yeah, thanks everyone for joining us. We do have a. Oh, there we go. Yeah.
You just want to go straight to the podcast?
It says 15% off your first month or year of trade ideas. You can also use it to upgrade from standard to full. Next slide. Thank you. Next full hour of one-on-one training with Andy or Jamie. And if you have any questions, contact us, info@trade-ideas.com. Follow us on Facebook and Twitter. We'll try to have the recording up tonight, and you'll get an email reminder tomorrow. Thanks, everyone. See you in the 3-hour session tomorrow, or have a great weekend. The Monday and Tuesday webinars next week are canceled. Thanks, guys.
Thanks, guys.